Be sure that everyone can hear me. Sound check 1, 2, 3. Let me see if I can get my... Okay, I think you can hear me fine. Let's see here. Good, wonderful. I appreciate that. Thank you so much. Thank you, thank you, thank you. All right, wow. So it's great to have everyone here. I got some emails that a lot of people are on vacation. And, you know, I think that's good that they're on vacation in August. We're going to talk today about what I consider the worst trading month of the entire year. So let's just get right down to it. I want to thank AgenaTrader for this opportunity. Very powerful charting software, and your commitment to trader education is greatly appreciated. Now, we're all adults here. Let me go through the disclaimer. Trading financial instruments using contracts, stocks, or options is extremely risky. Only trade with money you can afford to place at risk. Past results do not guarantee future results. And remember that sometimes futures, it's just not a suitable investment for everyone. I do believe you should paper trade and learn any new concepts. Paper trade regardless of your level of expertise. Now, let me just give you about a 1-minute introduction to who I am. I've been trading for 25 plus years, 10 years plus as full-time trader. I launched a teaching newsletter with trade strategies in 2008 and then moved it to video in 2013. Now I do a combination. If it's something compelling, I'll make the video. Otherwise, you get a nightly update. I hold these immersion intensive boot camps about 4 times a year. And this is for, one camp is for day trading, one is for swing trading. Everything that I teach works on anything that shows movement, be it stocks, options, bonds, futures, forex, anything showing movement. That's important. This is me, and that's my trading office window at the house. Here's the trading chamber. Okay. Before you do anything else, I'd like to ask you, go to the website, hitthemarktrading.com, because you can get for 30 days, sometimes even more. I'm not going to be strict about this, but I do provide a morning client letter, and I'll put out there what I believe for that day is going to be good ideas for day trading. Okay. This is what one person who subscribes has said, that he's addicted to Rooster Call, and the reason is it takes me an hour and a half to write it because I'm looking at the charts, I'm looking at what happened overnight, but it takes you about a minute and a half to read it. So that's free. Just want to make you aware, and we're about to start, I am having my next Just Day Trade course start live session September 19, and I'll have a swing trading course start September 26th. These are 6 hours jam-packed information. If you want more information, just go to the website, hitthemarktrading.com. Everything I do is designed to make you become your own expert. Okay, so I call trades in advance from the right edge of the chart, and you watch them unfold, you practice on paper, and then you gain confidence in yourself. Now, in everything I do, we look at charts in an all-encompassing point of view: price action, price oscillator, linkage between markets, which is huge. Why is that huge? Because the machines are controlling the day trading. Absolutely. So now our featured presentation, let's get started. August, my gosh, trading the worst month of the year. Now the reason I say this is because Europe is on vacation. Let's face it. Europe is on vacation. It's the last month of summer vacation in the United States. So most of the trading professionals are taking the month off. U.S. Congress takes the month off. Well, okay, so that means nothing earth-shattering is going to come out of Washington to affect the markets. Earnings season has peaked. So basically, the junior clerks are in charge. They're manning the trading desk, and they're basically told, all we want you to do is monitor the markets and call the supervisor who's on vacation only if necessary. This is why the volume is so low in August. So it begs the question, if the professionals are all on vacation and volume is typically very low every single year in August, shouldn't you plan your vacation during this time as well? I mean, doesn't that make sense? And if you do trade, what are the instruments and the strategies? Now, here's the typical August on this daily chart here. And let me get my pointer. Okay. Having a problem getting my spotlight here. Come on, spotlight. Oh, okay. Let me try this one more time. I'll try an ink pen. No. Oops. All right. If you can look in the, sorry, when it rains it pours. If you look in the shaded area, this is typical August. Now this is around the last week of July into August. So we were all set up for a normal, boring, tight range August. This is, you check your charts, it's typical. The North Korea saber rattling woke everybody up, woke the markets up. All of a sudden, the markets are not sure what they want to do. Everybody gets risk averse. But had it not been North Korea, I mean, there's been days when the entire range on the ES was, I don't know, $275. So the day trader must, this is a day trader must have decent trading range, must have moving markets. And I'm sure if you check your records, if you traded in August in the past, equity index futures, I'm sure that most people are not happy with their results, okay? Without decent trading range, without moving markets, you have to understand the day trader has weak probability of follow-through. Losses have a higher probability during this time. Absolutely. Now, this is the YM last Friday. This is the reason I don't trade Fridays in the summer. So I think the time here is around, a little after 10. Okay, so from 10 all the way to 2:30, it's a $200 trading range. So what happens during that time? By the time you enter, the market's going to likely go against you or simply do nothing. Nothing, nothing, nothing. In fact, take a look at this chart. From 11:35 to 2:30, it was about a $90 trading range. Tell me how you're going to do that. And by the way, before I forget, low volume. Volume itself in day trading is not what it used to be. Day trading is all about reacting. Day trading is all about seeing the market, understanding if the market is moving or not. And when you get sideways price action, you have to be able to block it the exact way I block it. And you simply wait for price to resolve the issue. Because if you don't, I guarantee you are going to get, no matter what system you use, you're going to get some false signals. This is just part and parcel. This is the rules of the game. This is what the professionals are doing. They are grinding it. They don't have confidence to go up or down. Everyone's waiting for a break, and the retail trader gets absolutely 100% chopped up. Okay? So this is why we have to look around. Typically during this time, we find that gold and crude are the better day trading instruments. Well, why is that? Okay, so gold is in a seasonal period right now where it more often than not goes up. So I already know, sitting here today on August 14, I already know that during the same time next year, I expect gold is already experiencing a rise. All right, that's seasonality, which I love. What's going on with crude? Well, typically, we're not being so typical right now, but typically, the professionals, all the smart money, understands that the driving season is ending in the United States, and they're starting to position to the downside. So the bottom line is we've got compelling reasons, fundamental reasons here, that there's going to be movement. And that's why I prefer looking at gold and crude in the month of August. By the way, this year the new North Korean saber rattling, it certainly has spiced up equity index futures. Absolutely. Okay? And all those people that went short on that big drop you saw on the ES, in the overnight session, they were forced to cover their positions. Okay? Geopolitical concerns have lightened up. Now, for stock traders, August is the prime time for non-directional trading strategies using options. What the heck is that? That means you are betting, you have a strong belief that markets are going to go sideways. Well, there's absolutely professional trading strategies that take advantage of this. So if there's enough interest, just let AgenaTrader know. I will hold sessions on stock trading using options. Simplified option strategies, the same used by the large trading firms capturing gains in a low volatility environment. Okay? Stock traders can cut trading risk further using non-directional option trading strategies on equity index futures. Okay? Just check the past years of chart history and you'll see why non-directional trading typically excels this time of the year. It really does. Now back to the day trading. If you've watched the other two Agena webinars on trend and momentum trading, then you know we seek momentum. That's huge for us. Okay, I'm not going to go into all of the details. I gave a session on day trading and I gave a session on position trading. These are archived with Agena, so you can certainly find them. I will highlight that in momentum trading, it's the art of spotting a market ready to move, selecting a trade, entering the trade with confidence, and utilizing predetermined exit points. When we determine trend, we're going to look at the daily chart for the big picture and use a short-term chart for tactical entries. As a general rule, the more volatile the market, the smaller the time frame. Now recently, in my trade room, it has been so incredibly slow, we have started looking at a smaller time range, but it is incredibly slow. I just want to reiterate the most important statement that if you are only an ES futures trader, you must, or you only trade, whatever you like to trade. If you only trade soybeans, I don't care what you like to trade. If you only trade one thing, you must expand your horizon at other times, looking for futures that are showing movement. Now, when you do this, you have total belief in your system, in your methodology. And if your methodology is robust, it's going to work on anything and everything. So, I'm going to show you some charts in a minute. Then we're going to go to live charts. We bracket price with trend lines, daily chart, intraday chart, and here's that very, very easy to understand concept, highly technical. Price will bang back and forth between the price trend lines. How easy is that? So this is a chart I showed in one of the recent webinars. This is Crude. So by looking at the larger chart, the daily chart for day traders, we see it's obvious. Okay, the trend is down. I see that. I think this has been such a risky market that even though there has been some spectacular trades here for the position trader, it is basically, it's an unbelievable gift for day traders. The range is quite nice. Here's the 10 range bar CL chart, and all I'm showing here is we must have movement. When we've got movement, when this instrument's moving, and then you look and say, well, why am I wasting time on equity index futures in August when they typically don't move? That's my point. I'm trying to gear you to think about how can I find a situation where the probabilities are in my favor. And that all starts with range, trading range, and momentum movement. Now, you know, if you saw my other webinars, that I use the commodity channel index, okay? And I like everyone to understand that I don't really, it doesn't matter to me what you use. In a strong momentum market, everything's going to work. If I flip a coin, it's going to work, okay? Everything works. But in a tight range market, all price oscillators are going to lose their predictive value, even the most expensive proprietary. So it's just one more reason I want to reinforce, look for momentum. Now, the commodity channel index, this is taken from John Murphy's book, page 239, and that last, second to the last sentence here. He says, notice that the CCI turns before prices at each top and bottom. The default length is 20 days. Okay, that's huge. That's in print. This is required reading if you're going to be a charted market technician. Notice that the CCI turns before prices at each top and bottom. As a general rule, just a general rule, we believe the CCI gives you about 1 day warning, 1 day advance. Okay? Now, this has been like just a little bit of a refresher for you. If you're totally new, I'll quickly state the CCI is plotted on a histogram. Zero line represents major support and resistance. The 100 and 150 line, they represent minor support and resistance. Now, all of this is explained in my earlier AgenaTrader videos, which I suggest that you, even if you've watched it once, you should watch it again. Okay. The chart packages will all have a setting to the default 20. You're going to adjust yours to 14 for day trading. Smaller time frames in moving markets with good range. That's your modus operandi. I used to say to trade during the rush hour instead of all day. The rush hour, I tell you, in 2017, the rush hour has not been much of a rush hour. Typically, we look for movement from 9:45 till 11:30. It's all been so slow. It's all been so slow. Key points to remember: draw your trend line starting at a plus or minus 150. Better trades are in markets showing momentum. 14-period CCI for intraday below 60 minutes. Now again, I'm skimming over this because I've already covered it. What I want to really jump into today is what I use when I'm not teaching the mechanics. because my courses all teach the mechanical method for trading. And then I have a very private trading room reserved for people who have taken the course. And I do this because it keeps me from answering a lot of silly questions. So everybody's had the course, everybody knows what we're doing, and now I'm in there watching the charts, stressing the mechanical entry, saying, okay, get ready, we've got this set up, we're going to take this long. We're waiting for this bar to print. We know where exits are. If we're going to use a trailing stop, we'll do that. We believe in market linkage. Market linkage, in case you're unfamiliar with that, you have to understand the machines are controlling trading now. Over 70% of day trading is controlled by algorithms. So we watch market linkage, and we know how the machines are trading. How do we know? We follow their footsteps, and they work in predictable ways. You know, Wall Street is a lot like Las Vegas. All those huge buildings on Wall Street, all those huge salaries, they're all paid by trying to take money from retail traders, right? And they have to keep it simple so that all of those professionals can follow the rules. And they do keep it simple. It's the retail trader that complicates, especially with multiple confirming indicators and stuff like that. You do not have time for that in day trading. You absolutely do not have time. Follow the machine footprints. Now, when I'm not teaching, I have everything else automated. Everything that I like to use as bread and butter. So that's what I like about this Agena software. It's called semi-automated, because the suggested trades show up according to the criteria that I'm looking for. I hear an alarm sound, I look, and there's the protective stop already assembled. There's the target, trailing stop already there ready. I simply look at it, I agree, enter. At all times, I am the trader in command. A lot of people are very, very scared about automated trading. And there's no problem having, worry about, well, do I want to just leave and let the machine trade? The best approach is where you are the trader in command and you believe in your system. So the trading assistant, I like to call it a trading assistant, says, hey, I got one for you. And then the trader in command looks at this, says, makes sense, let's go, let's go. Now I'm going to go to some live charts here in a moment. But this one is taken from one of the lectures. I encourage you to check out the earlier lecture. Notice where it says trailing stop. There's an arrow. See, there's two blue arrows there. Those are buy signals. This thing has picked up a couple of, well, there's about 14 to 16 different decision points in this whole thing. But what we've done here is I wish I could get my drawing tool to work. Whoops. You have the diagonal trendline break, which is, I give you that for free in that lecture. But you've also got something else going on. If you peel back the layer, you have what we call market structure. And the blue arrows, the little blue arrows where it says trailing stop, those blue arrows are trade signals. And they have read that a low has been made, a high has been made, a lower high has been made, and then trigger. And so, boom, up goes crude. So once you're in the trade, if the trader elects to get into it, the blue line is your protective stop. The red line is if you're going short, that's your protective stop there. Let's go to some live charts, shall we? All right, my goodness. Crude. What are we talking about? Crude in August? It moves, right? It moves. So here you see the signal given. And when that signal was given, this dialog box opened up. Says short 2 contracts. Initial stop is there. So you're risking on this particular trade $210, which is, that's about what I risk on these using a 10 range bar chart. And then you've got it says target 1, 80 bucks. In other words, make 80 bucks, let that pay the light bill, and then use a runner. So this trade actually, had I hit it when it was signaled, would have already banked 80 bucks and would be using a runner. So there's the runner, the red line. Make it bigger for you to see it. And the runner's only taken out if and only if price exceeds it. If it just touches it, we're still in the game. If you know anything about trading crude, you must let crude run. It's got to have a little room to run. So this is just an absolutely gorgeous live example of how, in my time, it's like I let someone else drive. Because I get frustrated when something's not moving. I really do. But this has proven itself to my satisfaction to the point where I can say, okay, you drive. A signal comes up, boom. Evaluate, take the trade. And you can see the beauty of a moving market. Let's just look at this. Hello, hello, hello. Okay, now here, this blue, just because we got a signal doesn't mean we're going to take that. And even if we did, guess what? Nothing's 100%, so it's a small loss. Taking this short, my gosh, what a run. Hello. All right. Let's take a look at gold. These are 10 range bar chart. What does that mean? That means that price moves 10 ticks and then the bar prints. So it might go up 4 and down 6, boom, that's 10, it's moved, print the bar. Now let me just get rid of this trailer for one moment. This is a cluster. Get my arrow here. And the cluster is telling me there is a preponderance of short signals. In other words, they've started their engines and they're about ready to rumble. They're ready to go. So I always like to see the cluster. Remember, there's about 16 decision points. That's why there are, you have 4 signals here. You get 1, okay. 2, okay, wow, that's something. 3, and you say, well, you know, wow. 4, it's almost like, what are you waiting for? Some of these signals are just beautiful, absolutely clear-cut. Hello. Sometimes we get into chop. This is something you can apply immediately. Let me show you something here. Hang on. I'm having a little bit, I think there's something with this, the GoToMeeting. I wanted to put my rectangle around here. When you see you're in a tight sideway area, I can't get this, my drawing tools. Pen, try it one more time. Nope, I don't know. It's the presentation software. When you see prices tighten sideways, block it up like you saw me do on that YM chart. Simply block it up. Okay? Let me get that YM back up here. This is something you can apply immediately. Block it up, wait for 2 price bars to penetrate, and then go short. I actually have in this program, which is available by the way, I actually have in this program where you can make this as wide as you want, the signal, where it's going to give the signal. And the way the prescription is now, if there's only trading 2 price bars, then I'm not interested in it. If the range, there you go. If the range is 2 price bars, I just really am not interested. But if it gets 3 price bars, then I'm interested. I think it's going to break out. We can actually widen that if a person wants to widen that or shrink it down. But as a general rule, I want at least a $200 range, greater than $200 range, because $90 range you're going to get lucky if it breaks out in your direction, really. Or you just wait for the box to resolve itself. And let me go back over here. What were we on? Crude, was it? My short-term memory. Okay, so this crude is just done beautifully. Let me go to the ES. Okay, here's a great example. This is the danger. Block it up. Block it up. Wait for price to resolve. So this happened all overnight last night. Let's take a look at, I know I've got someone watching that trades platinum. Here's how this strategy performs on platinum. Well, you can make some big money in this platinum market, I'm telling you. Okay? Beautiful, 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 beautiful. Now, it goes without saying, if you can visually see, hey, got a high, got a lower high, maybe the trend is down, maybe you don't want to take any counter trend trades. Last Thursday I took counter trend trades, and believe you me, It was such a strong day, it was not pretty. Trend traders ruled. Let's take a look at the NQ. Okay, here we have a signal and automatic. Now this one is interesting. Wants to go long, 2 contracts, take one off early, and then the other one will run with the trailer. Here is our, let me get rid of that. This is pre-market. This is 7, 8 o'clock in the morning, so that's tough trading. But here's 9:53 today, just beautiful. Just beautiful. Now the Russell 2000, I'm not trading until September, and it'll be RTY. So I'm not really interested in the Russell 2000. Gold, did we look at gold? I can't remember. Just some beautiful signals. Again, these charts are presented with the signals, and you're the trader in command. Now that's a 10 range bar. Obviously we can open this up. We can go to a 15 range bar. A lot of times on crude, people don't like a 10 range bar because it's too fast. That's fine. We go to a 20 range bar. There's no problem. In fact, when we are trading crude, we're always watching a 20. We're always watching a 20, but using the 10 for tactical entries. All right. Use 5 range bar for platinum. Okay. Thanks for getting the word out on platinum. Okay, let me go back to this platinum 1 second. That's a 10 range bar, so my buddy's working with the 5. You know, I think that there's a conflict with this the resources for this go-to webinar. I've never, ever, ever encountered this before. So this is a weird one-day deal here. I don't know what's going on. I was going to change this to 5 range bar. There's 1 day. Thank you. I don't need that. Oh, and yes, this stuff works on daily charts. For people that are like to position trade, absolutely, my gosh, absolutely. Okay, absolutely. Some people like a minute chart. It's a daily. Let me, here's our 5 range. You know, I've never seen this occur. It's this, and the GoToWebinar drawing tools are not working for me. I apologize for that. Let me just go back to this presentation, the PowerPoint. Okay, so what I've shown you is a semi-automated trading environment. Load your plan. It's easy to program it. They'll help you. See your signal suggestion on the chart. You can have your protect a stop there and your trading stop and then go. In fact, I've let them put the rhyme stop, we call that, in the AgenaTrader software, so you can just use the same stop I'm using for trailing. It's got built-in money management for order sizing. All that means is you have a certain allocation based on your account size. And as you make more money, it automatically is going to allocate more resources to the trade. So maybe instead of trading 2 contracts, you're trading 3, or instead of trading 10, you're trading 12. Automatically done for you. And if you lose, well, it's going to cut you back. You quickly agree or not to the trade. You're the trader in command. Well, how do you know if you want to agree or not? You've proven the system to yourself. That's how you prove it. Now, everything that I have shown you in my webinars for Agena is robust across any instrument, across any chart time frame, and if an action repeats, we can trade it. I do prefer using activity-based rather than time charts. I don't care if you're using volume charts, range bar charts, tick charts. If you're pressed, then okay, a 1-minute chart. You can always refer to a 15-minute or 30-minute just to keep abreast of the bigger picture. But when you're in the heat of the battle, I prefer an activity-based chart. And the reason is, I used to be trading 3-minute. We get this gigantic price bar on 3 minutes, and that tells me, okay, take a trade. Well, every time you get a gigantic price bar, there's typically a pullback, and the pullback always took me out. So that's why I love the activity-based bars. Now, everything that I've shown you today, it's available for AgenaTrader. It's available. It's a great program. A lot of work put into this. It's your assistant. It's your ultimate day trading assistant. And it's something of a relief when markets are so slow and not moving. Absolutely. Absolutely. Don't forget to create no-go rules. I'm not interested in taking a trade if the range is around $200. I must let price resolve the issue. Meanwhile, if you're trying to trade $200 or less, the oscillators can just chop you up, and then by the time you are all spent, it's like, this is awful. That's when it breaks out, and then you're too mentally weak in your resolve that something's really going to happen, and then price just goes and goes and goes and goes. So I've shown you something very important today. You block it up and you wait for price to resolve the issue. How simple is that? I don't need to worry about market profile. I don't need to worry about volume or anything like that. I have to follow the footprints. I think the day trading game is best for visual traders who can react with a quiet confidence, knowing losses are part of the game. Now, this is so important. Clean charts for faster decisions. The day trader is no different than a professional poker player. It's not each hand, but a series of hands played which determine the outcome. This is a numbers game. As such, you got to have some starting capital. People trying to get into this business with $2,000, forget it. Forget it. Forget it. It's a numbers game. There are going to be losses. Even a strategy with 70% win rate means you are losing 30% of the time. And Wall Street would kill for 70% win rate. The day trader gets in and out taking a series of trades rather than pinning their hopes on the huge trade of the century. Right? We're like a mouse under the banquet table looking for crumbs, because intraday trading noise causes markets to move up and down. So since it's a numbers game, you want to look at your system. What does it look like over time? And at minimum, look at a 3-month look back period. Understand that all day traders experience drawdown if markets simply are not moving. That's big. The seasoned investor knows that, the seasoned trader. Most people fail at day trading because they forget to think like an elephant. An elephant gets mighty big eating peanuts. The day trader capturing a series of trades and then leaving the game, waiting for the next trade, is happy even if they miss the trade of the century. Now, one of the things I always mention in my trade room is that the secret is not winning big. The secret is winning small and winning often. This is day trading. This is not position trading. String together a series of short duration, high profit trades. Let me repeat that. String together a series of short duration, high profit trades. The other day, I think it was Thursday, I took a counter trend trade, and normally my first target on the NQ is 15 ticks. Well, I was just, I think, watching too many markets. And so I tried to move my, manually move my profit target. And somehow I settled at 25 ticks instead of 15. Now I know it's a counter trend trade. And I'm thinking, well, 15 will be good. But you know what? 25 ticks. So I'm watching so many markets for everyone. And I went ahead and I just left it there. Well, guess what happened? The trade works as expected, runs up, I don't know, 17, 18 ticks, and then completely breaks down. So my takeaway from that is manually trading, you have so many opportunities to make little mistakes. And these little mistakes can cause big loss, right? I was trading 3 contracts, and the idea was take 2 off and then let 1 run. And the deal happened where, you know, all 3 lost because I manually am trying to work on this. It didn't go to the 15 when I first set it up because I wasn't using the semi-automated system. And that's what I like about having a system where you just press the yes, I'll take the trade button. Because we're only human, we make mistakes. So imagine just taking 2 contracts off, banking your 15 ticks on each one of those. Market reverses, you've only got 1 contract exposed. Okay. All right, I'm going to wrap this up. I'm ready for questions. And I want to thank AgenaTrader. And I also want to remind you, if you're interested in my morning client email, I send this out before market opens. No cost. Hit themarktrading.com. Go to the contact page. That's where you find it, on the contact page. I am holding a live course session September 19 and 21 for day trading, 6 hours intensive. And then we've got the position trading. That's for people who like boot camp for learning how to position trade, swing trade. We just took a trade in soybeans at over $2,000, but that position trading camp is the 26th, September 26th, for 3 days. Now let me go to any questions, and I want to just put up. I'll put up these charts again. I really don't know what's going on with this, with my computer must be inundated with resources devoted to that webinar. There's gold 5 minute just to show you. It doesn't matter what you like to work with. Interesting. Find my questions. Using the action bar to change the time. Using the action bar to change the time. I just go up here to this, up here 5 minutes, and I don't know why it's never ever blocked. It's never done that before, ever.
Hello, Martin.
Yes.
Can you hear me? This is a problem with GoToWebinar. It seems we already experienced that before, that when we hold a presentation with GoToWebinar since a while, somehow the menus are getting wiped out, so you don't see anymore. So what you would have to do is on the right side on this time frame slider, just move up this blue.
Oh, that's right. Oh,
yeah,
just the simple way.
Yeah, just move it up here.
Okay. Well, I got back on the 10. Let me just see if I can get this down a little bit. There's a 5 range.
Yes.
Beautiful. Let me go to that platinum because I got a platinum trader here I want to show this to. Thank you.
Okay, good.
Thank you, Gilbert. All right. Okay. So here's the 5 minute, 5 range bar platinum. And you can see these beautiful signals here. Now this is one of those market structure moves here. Look at this. High, low, lower high. There's your signal. Beautiful, beautiful. Now the ES, I never ever, I do not look at the 5 range bar ES, okay? But it's been so slow that it was like, okay, sometimes if a worm doesn't work, we're going to try to use a cricket. You know, it's just. So I do prefer the 10 range bar because when the market moves on a 10 range bar chart, to me it shows more robust, but you've got to adjust in day trading. You've got to adjust. Remember I talked to you about this drawing the line here. Let me do it with this. You know, draw a line, hello. Draw a line, hello. And then you just wait for 2 of these closes. There it is right there. Or if you want to be conservative, use that one. This is what we do. It's so freaking simple. I'm not worried about what's my volume doing, what's my market profile doing, what's this doing, what's that doing. I'm working off the footprints of price. I am working, and I know through years of this how the machines like to trade. And we would already assume that once they get that ball rolling, where they're going. I don't need to be told that. This is all part of being a day trader. You know the lay of the land. You know how to pick your battles. You know that when there's congestion in a breakout, it's going to mean something. You know that, right? All right. Let me look at some more questions. Pascal, thank you for that information. Is there any reason you know of why oil seems to get so much volume about 2:30 p.m. EST every day? Well, the U.S. trading stops what, at 2 o'clock, the old pit trading hours. And, you know, I don't know why they still have the old pit trading settlements for gold, and everyone's trading gold on electronic markets, but they still shut gold, you know, or show them on daily charts at a certain cutoff time around, I think, what is it, 2 o'clock, 1:32? I ignore it because I know people are trading gold all day. But that I think on the crude, part of that, to answer your question, is just a hangover of herd behavior. The afternoon crowd comes in, and then they big money is taking it at that time because typically the volume is lower. Let me see what else we got here. Good question. Okay. So my platinum trader friend, and by the way, he took a great seasonal recently. My platinum trader friend said to remind you that using semi-automated, which is what I love in this AgenaTrader, it's going to help people that have problems pulling the trigger. And if platinum is moving, he suggests use a 10 range bar, okay? So that's pretty good advice there. I generally prefer gold because of the volume, but gosh, if gold is slow, it can be absolutely detrimental to your fiscal health because out of the blue, boom, it goes. That platinum, now that I'm looking at it closer, and I've kind of got this seasoned trader nudging me, I'm going to have to look at that platinum more. Yes, David, that's right. Open outcry used to end then. Is the add-on good for Forex? Absolutely. Absolutely good for Forex. Absolutely. Absolutely. And, you know, Pascal, I've got some clients trading the pound US dollar and the euro yen off of this thing. The main reason that the add-on works is because it gets back to the basics of trend and momentum. And it's robust. Obviously, if we weren't going anywhere, if we were not going anywhere, then we're going to have problems. So then you got to say, well, is there another Forex pair I can trade? You know? I don't think I would trade, for example, a $3 stock because your range is simply too tight. Maybe there's people that are gifted at taking 25 cents on those $3 stocks. You know, to me that's too small. This type of methodology is going to work for instruments known to move. And by the way, speaking of Forex, Pascal, I've never traded the Mexican peso, but I've watched it because it moves with crude, right? But we had a unique opportunity here recently, and we jumped into, I think it was in January, a stock called BSMX, and it's a big too big to fail bank in Mexico, BSMX, because it basically runs with the Mexican peso, and it's just been a beautiful trade. And of course, the Mexican peso has been a beautiful, beautiful trade. I just decided that I needed to paper trade it before I really started allocating real money to it. The peso got beat up all because of the U.S. election, and then all of a sudden, it's just rising spectacularly. The euro yen, a wonderful, wonderful, wonderful currency pair. It used to be excellent at predicting how the ES was going to move. Not so much anymore. Listen, I've been at this for about an hour now, so I want to thank you for everyone being here. If you have not taken a look at the earlier Agena webinars, please take a look because I go into more detail. If you're interested in learning more about what I do, then by all means, please check out the website. If you're interested in learning more about the Agena add-on, they've just redone that entire shopping area. Let me get this out of here. Hang on. And it's very easy to find. I know that the price tag is big, but you can look at this on a rent to own basis if you don't want to shell out that much money. I understand that. The better value is buying it outright. And I'd also like to let you know that if you decide, if you're not using AgenaTrader and you decide you want to try AgenaTrader, you can sign up for a 30-day trial. If they see that you are actually going into the webinars and the training and you're really trying to learn the software, they're probably going to give you another month. And when you do that, I've got my template that I can share with you. It's not going to call the entry signals, but it's going to show you my histogram. So this way you can get experience looking at my template on the AgenaTrader, and my feedback is the people that are using it love it. Okay. Do you have a link to the Agena page with your previous webinars? That is being placed on Trader's Yard, I believe, Scott. Otherwise, if you want to drop me an email, I'll send you a link. Martin at hitthemarktrading.com. Once again, I want to thank you for your attention here today. Appreciate the time you've taken. I realize that you're enjoying your summer, so that you spend it with me, I appreciate very much. Thank you. Oh, you're welcome, Richard. And thank you, Gilbert, for hosting this event. Bye-bye now.